Hey guys, it's Josh from the Finlay Mortgage Team, and in today's episode, we're going to talk about the difference between a cosigner and a guarantor. Okay, so you've had your meeting with your mortgage broker, and he's given you your qualification, and that qualification may be lower than expected. Your mortgage broker brings up the idea that you could take on a cosigner or a guarantor, but what does that mean to you? You often may hear the term cosigner or guarantor used interchangeably, but they actually have two very different meanings and rights. So, if a buyer can't obtain a mortgage due to poor credit or unemployment history or lack of down payment or income, most lenders will consider lending if there's someone to act as a cosigner or guarantor for a mortgage. A cosigner is basically a co-owner. So that person's registered on title and is equally responsible for all the payments. Although, it's often a given that the cosigner will not actually make those payments. A guarantor, on the other hand, personally guarantees all the payments are going to be made if the applicant defaults, but actually has no claim to the property because they're not being registered on title. Now, lenders require a cosigner or guarantor for a mortgage for different reasons. A cosigner is used when you need to support income. So, if the original applicant's qualifying ratios don't quite meet the lender's underwriting standards, a cosigner is required to bridge that income gap. Now, a cosigner, because their name is also on title, must sign all the mortgage documents and can be expected to remain on title until the applicant actually qualifies on their own. In the case of two spouses, for example, a cosigner might remain on title indefinitely. Now, keep in mind, actually removing somebody from title involves legal fees. A guarantor is usually called upon if the applicant qualifies by income but has a slight credit blemish or hasn't actually established true credit. It's also an option for couples who are entrepreneurs who they don't actually want to take the liability or risk of losing their home or business if they go bankrupt. So they simply keep one person off the mortgage and one person on the mortgage. Now, some guidance for guarantors. A guarantor has to be stronger financially than a cosigner because they promise to carry the entire debt of that mortgage if the homeowner defaults. Now, as a result, guarantors are carefully scrutinized and undergo credit checks and must also disclose all assets, liabilities, and income to the lender. Therefore, it's really important for guarantors to know all of the circumstances of the person they're acting for, and you need to be confident that the applicant is going to make those payments. Before signing, all guarantors should also seek independent legal advice from a third-party real estate lawyer who's not involved in that transaction. Um, that's been the Mortgage Minute, guys. Thanks for tuning in. Looking forward to seeing you guys next time.